Right, okay, so if you can start up your Pat, so go through your VMware and the stuff you have to do now to start that up.
Windows 8 should be just coming up here. Yeah, there we go.
Oh, that quick, amazingly. Oh, good.
Good. So can you see my screen at the moment?
Yes, I can see your screen, and I'm recording that now for other people, so the other Pat users can see that as well. And then I'll be able to send this to you as well, so you'll have a record of what we're doing and and what we're covering. Okay, so in a nutshell, what I want you to do is to tell me where you think you need help, where you think what would you like to get out of this call, out of this training session? What would you like to get out of it?
Right, I think the biggest part I'm probably struggling with is, which I guess a lot of the students do, is the manipulation phase. One thing I don't really get is how we go about, or the market makers, should I say, go about taking the stops from both beneath and above in order to help us decide which way they're going to profit release. Obviously, our job to work out the contents of the box.
Okay.
So, say for instance, the market makers are taking the market down a little bit after the accumulation, possibly down the 45 pips to collect, obviously, the buys, leading the traders into selling the market, collect the buys, obviously to profit release on the way back up.
Right.
If it then comes back up and stock takes from above, then obviously collecting the sells and then going back down again. Just, the sort of like, I think what you've described as is the whipsaw, when they're going up, down.
Okay.
And then getting to the stage where you think, well, now I don't have a clue which way, if you like, because
Okay.
maybe I'm just not understanding the theory correct.
Well, first off, let me just stop you there. When you haven't got a clue about something, don't treat that as a negative. Never treat that as a negative. Very important. Now, what I want you to do now is go to your Pat, and I want you to go up to lines in the menu. You'll see lines up there. No, not there. It's where it says lines, the actual menu.
Oh, yeah, sorry.
And then click on that. And then remove all horizontal lines.
Okay.
All right, now, what I suggest you do is you do that when you actually start trading. Now, you might have other lines on that you want to keep and stuff like that, but I suggest that you actually remove those, and certainly periodically you remove them, and then you remap the market, as it were, because often what can happen is you put the lines on and you can become totally overwhelmed with what you've got, and then you've got a line here and a line there, and you're not too sure. So it's a good idea to clear down and then start again. Now, what I want you to do now is scroll back to something that you would like explaining, that's something, and then we can go through the chart on the bar or going through the day as it was. So just scroll back to, say, something that you want to look at, and then we'll cover that.
Tell you what would have been a good one then, would have been the GB. I'll go to the GB.
Okay.
There we go. And then I'm going to go back to the 3rd of July.
Okay.
I'll just go back to the 3rd. There we go.
Are you clicking on your mouse or using your keyboard?
Clicking on the mouse.
Okay,
yeah.
right. Well, a good idea here is if you actually use the left and right arrow on your keyboard.
Okay.
You'll find that it'll easily just scroll back nice and fast for you, and
yeah.
And also, if you use the up and down arrow, that zoom in and zooms out.
Okay, brilliant.
Yeah. Now you might want to go up to that lines menu again and clear off those lines.
Lines. Move horizontal lines.
Okay, and then zoom out onto the day that you want to look at, so that we can see from there, and then go through that.
So this, for instance, is quite a good.
So
July 2nd is quite a good. This was the final, after we were talking about losing 20 trades in a row. It ended on July the 1st.
Right. Okay.
I think it ended up on July the 1st.
Right. So at that point there, you'd gone the 20 losing trades in a row. So you nearly got to my 32. Well, you're quite a way off my 32, actually. So you were trying to beat the record, were you?
I was trying to take the new record.
Yeah. Well, as all joking aside, the 32 trades for me many years ago was really a watershed moment. And I can actually remember the 30-second trade I actually put on, and my wife came into the office at the time when I was doing this, and we had this discussion. And I said to her, what I'd done, I'd just gone, I think I can't remember, I think it actually was I'd gone long, and it was in the DAX at the time. And yes, and within a few minutes I was stopped out, and I said, that's it, that's 32 trades in a row. And, you know, she sort of, we had a quick discussion, and she sort of left the room, and that was a turning point. It was, everything sort of changed for me from then. I realised that something was fundamentally wrong. So the fact that you've lost 20 points, 20 trades in a row, let's not treat it as too bad a thing. Let's treat it as a moment where we go forward from, because you know after that time. And when I say often I talk about your mind knows something is fundamentally wrong. Now there's two reasons. There's another reason why that you can lose successively. Now I will explain this because it's a bit of a psychological thing, but it's quite important. If you are standing in front of an oncoming train, the train is bearing down on you, you will feel fear, trepidation of what might come, and your brain will do everything it can to get you out of that dangerous situation. You understand that? Okay, now, if the mind perceives a situation as dangerous, any situation, now the train obviously clearly is dangerous, but the mind will analyse every situation and perceive if that situation is dangerous. And it could be into a road rage incident, or something where you expose yourself to risk and danger. Now, if the mind perceives trading as a very risky as a very, very risky environment, in other words, i.e. a dangerous environment for you, does it make sense to you if I say to you that the mind will then do everything it can to remove you from that environment?
Yeah, sure.
Okay. Now, what is a really good way to remove a trader from that environment is to basically make it so that they can no longer trade, so you can no longer step in front of the oncoming train. What's a good way if you were the subconscious mind now? What is a good way to stop you trading, to take you away from that danger? What would you think would be a good way to do that?
To actually trade?
Well, no. What would it do? So your mind is going to say, your mind wants you out of the trading environment. Okay, it wants to remove you from what it perceives to be a threatening situation. So, what do you think the mind would do? What would be a good course of action for the mind to take, your mind to take, to get you out of trading, get you off the screen?
Yeah, place a losing trade.
Place a losing trade, and if it kept doing that, what would be the result?
Well, I'd give up trading.
You would give up trading, right? Accomplished, mission accomplished. Okay. Yeah. Now, so how do you stop that? Well, first off, you've got to make trading a non-threatening environment for you.
Yeah,
so when you step up to the screen, now I know we're not quite covering the chart yet, but this is very important stuff, because unless you've got this nailed down, you are not going to be able to successfully read what the market makers are up to, because your brain is just going to be fuddled with what's going on. So the first thing you've got to do is get yourself in a position where the market is not a threatening environment. So in other words, when you turn the screen on, you don't feel fear, trepidation, or concern about what's going to happen. You're just there to do a job. You're going to analyse that job free of encumbrances of all these things, well, let's say these negative things or negative reactions, let's say emotions coming into you. Does that make sense?
Yes, it does, yeah.
Okay. Now, imagine now how you would, the difference, how that would feel. So, you're coming up to the trading screen now and you're thinking about trading, how you're feeling now. Imagine how it would feel if you stepped up to the trading screen and you didn't have any of that baggage with you. What do you think the difference you would feel?
Yeah, you're going to feel good.
You're going to feel good about what you're doing. And of course, when you feel good about doing that, translates back through to the whole body. The mind starts to feel good about it. And so suddenly you become very powerful. You become very, you can interact now because you're free from all these stuff that's hanging around you that's like baggage, if you like. It's like carrying a rucksack on your back. You need to flick the straps off when you're trading and enter it as you without all this baggage around you. Okay, so that's the first part, and I think that's quite important because that's what we're aiming for. So all the training that you do through Pat, all the simulations are actually about getting that rucksack off of your back, so that when you come along, and it's almost like it's almost like you don't actually need to log the results. Now, I know Pat Simulator logs all the results for you and all that sort of stuff, and that's great, and I suggest you do that. But it's almost like that's not really the essence of what it's for. It's really to continually train your brain so that when you turn on the screen, there's nothing new. There's nothing you don't understand. And that's the purpose of the trading simulator.
Yeah, I
So,
probably haven't used it enough, really.
and it's such a powerful tool, and I think people don't use it enough. And you know what you can do? Sometimes, what you need to do is when you're going to start trading is before you even get to the live market, go back and simulate the last 5 days. And you can run this through, in 10, 15 minutes? You can simulate that. And what it does is it hooks your mind into the last 5 days action of what's going through, and your subconscious mind is taking all this in. You're seeing how the market's moving up and down and sideways, and the runs are going off, and the runs are up, and the runs are coming down. You're seeing all this, and then suddenly you're you're faced at the front edge of the chart. But you've got this block of history in your mind. You see what I'm saying? You're not hitting the market cold.
Yes, no, I appreciate that. I totally get that. I mean, where I struggled with the simulator at the start was the speed of it. I actually had more success. I don't know if the idea of the simulator is to have it fast so that it tries to train the brain. But when I first began, when I got Pat software and started on the simulator, probably about 4 months ago, coming up to now, I struggled with the speed of it, and I actually did better when I virtually put it right down to just slightly faster than real time.
Okay.
And just had it on all day,
right.
doing what we kind of were taught to do, just go back and gaze and wait for something to pop out of your mind. So I was actually doing I was doing 3 days, like the 3 day of a simulator in 1 day, say, as opposed to racking through it in half an hour, if you like, because I just got lost in the speed of it. I totally lost in the pace of it. So I eventually found it not too enjoyable, but I used it well, and I did find it very useful. Then obviously when we eventually got the live feed, I much more enjoyed the paper trading on the real live charts. I found that more helpful to me. But I probably should use a simulator more. But will it get the same effect, I guess, if I slowed it down?
Absolutely. It's whatever.
The idea of it to be fast.
Yeah, no, it doesn't have to be fast. You can do that if you want to, and maybe you want to do that in 10 minutes before you actually start live trading for the day. But it's up to you. You should set that. That's why we gave it the speed setting, so you can set that simulation for as fast as you want. So you can do it as comfortable as you want. Gradually, what you'll find is you'll get faster and faster because your brain will be instantly recognizing what's it'll come together, and all of a sudden you'll get that intuitive hunch. You'll know, okay, something will just go or pop in your mind, and you realize that things you sort of almost won't understand why, but that's a very important thing. You don't want to really know why all the time. We don't, people say to me, of course you need to understand why. Well, actually, no, you don't. You just need to do.
Sure.
The actual, and a lot of people will. A lot of traders I speak to will try and analyse the bars. And that's why I say to you, don't analyse bars, because you don't want to know, you don't want to know why. I've never cared why.
No.
I just cared to do. So if I understand something, I don't want to know why. Now, many things it's nice to understand how they work, but I don't really want to know anything beyond, okay, I see this is likely to happen. I feel good about this, I'm going to do that. And that's it. Sure. And I don't get caught up in the mechanics of it and the why of it.
No,
so
I guess that's where we, as a new student, like you say in your training video, your natural things that we do in life, your job, you need to know everything in order to go to work and do the job well. And obviously, you say trading is very different, isn't it? We get caught up in all of that sort of stuff, and it can take us lead us in the wrong direction.
Yeah, no, absolutely. And okay, so what we want to do now is talk me through this July the 2nd. I
think this is a good example of where I'm struggling a little bit, because this is a perfect whole day of just like manipulation, really, isn't it? Where what I don't understand is, say I've used the cursor on the mouse. Obviously, the market's been brought down here and then taken up and then brought down here. So you say, okay, then we've had maybe a little stop, or you could even look at there as if you wanted to, with the jump bar down here, maybe the wane in here.
Can you
would
just
solve the
move
market here.
move your cursor onto your screen and then hold down the mouse button so that we can record on that's it. So we can then record what we're talking about. So when you talk about a bar, just do that, and then it will show up on the video later. So people will know. So go back to the beginning of the day.
Yeah. So back to the beginning of the day. So we've got accumulation. The market's been moved down slightly down here, and then obviously moved back up.
Now talk to me. Let's go back a bit there and talk to me about that bar there where you said moved back up. That sort of jump bar. Let's call it a big jump bar there. That bar.
Yeah,
one more
jump
there.
bar there.
Now what does that talk? What does that say to you?
I mean, I suppose I could look at that in two different ways.
You wouldn't be around to trade that because obviously that's very early hours of the morning. But it is it is a piece of information. So what would you be thinking around there?
I would either look at that in two ways. Either that was manipulation up by the market makers, or we have a change in beliefs.
Okay.
And that there's no more beliefs in the market moving down, or the market, people believe the market to come down, but the market makers have now manipulated back up.
Okay. Right. Now, what that says to me is, okay, as soon as I see that, so I wouldn't see it when it came on either. So I'd look at that in the morning. So I'd be around. I'd probably, later on in the day, obviously when I'm sort of looking at the market. But what that would say to me, I would go back and I'd look at that and I'd say, okay, right. Well, I can see clearly that there was a lot of energy entered the market there. The market really was pushed up high. Just have a look back on there. Now, if we look back, just put your cursor on back, you can see there was a stop take just prior to it going up. Can you see that? Go put your cursor back on that bar again. Right, and then just prior to that, you can see how the market's taken down below the bar that's about 5 or 6 bars back. So keep going back there.
Yep.
Okay. So now what I want to do is I want to isolate that as a story. That action there. So we've got the jump up bar. We'll call it the jump up bar.
Mm-hmm.
Now at that point, that sort of then said, okay, well, what happened prior to that? Go back. So that's a stop take. So we can see now that there was some underlying strength in that market that the market makers knew about, and the market was jumped up. So I would expect the market to have this underlying strength in it.
Right.
Now, so I'd be looking to get a long trade. That's what I'm going to be looking for. Now the market then comes back down, and if you look, go about 6 or 7 bars past that. So we're about 5:15 in the morning here. So go to around about what sort of time are you going to be looking at the screen? Let's make it more real.
I would be starting from about 5 o'clock Australian time in the evening. So it's about 8 o'clock UK time.
Right. So go to around 8 o'clock time there. Okay. So that's pretty much the time when you're looking at there, yeah. Okay.
Sure.
Now at this point here, what we've got is that the market has jumped up historically, but it's took a long time for it to come back down, hasn't it? From that thing bar early in the morning.
Sure.
It's taken a long time to get down to there. Now I said I was interested in looking at the long side of the market.
Yep.
Okay, but the market clearly has drifted down, and it is very much a drift down over that time. So then we have a bar down at the big down bar. So if you can go to there just before, that's it.
8:15.
Okay, 8:15. So what does that tell us at that point? What do you think that's telling us there?
Well, at that moment now, I would probably be thinking the beliefs are obviously to the downside now.
Okay.
Or again, is this a slight part of manipulation, as we've not really seen, say, a stop take up above here?
Okay.
I know we don't always get one, but I'd be concerned that if this was continuing down, where was the stop take above? Right.
Now, your thinking is really good. You're actually right. You're right on target here, and I quite like what you're saying, because immediately you went back to a stop take on the top. What was there one? No, there wasn't. Okay. So keeping in mind at that bar there, when you really feel, yep, I'm certain this is going to go down. This is now broken through the bottom. It's going to go down. This is it. It's going to. Yep. That's it. That's the whole lot. When you feel that is a time to be extremely cautious.
Okay.
Now, people say, "Oh, you need this sense of knowing." There's a difference between a sense of knowing, and there's a difference between a euphoric, "I have to sell this market" or "I have to buy this market."
Sure.
There's a great bit of difference. And that difference, that euphoric feeling, that overwhelming urge to jump in the market, I can guarantee you, almost guarantee you 99% of the time, you have just been manipulated, your mind has been manipulated, and you have been sucked into the chart by the shape that you see on it.
Sure.
And this is why I talk so much about form and content. It's how the brain gets sucked into it. And that shape on the chart is what does the sucking in. So we could say at that point that if it went to that bar that went down that we're on now, went right past what would have then been stops, go back to just above 3 a.m.
Here?
And no, go back. It's on the same day.
Okay.
3 there. Okay, so just under there, about there. So there would have been stops under there, wouldn't there, after the market had gone up to there. So
Sure.
if you put a horizontal line on there at the bottom of that, okay, there we go. Yeah. Now, you see the market comes back down to there and just probes through that,
Yep.
takes out some stops, because we know it's taking out some stops. We look at the belief bars are blue.
Sure.
So a lot of activity occurred at that point.
Sure.
Now, at this point here, I would be interested in buying the market.
Yeah. What,
Okay.
here or
No,
here?
once after the next one.
Yep.
So if I saw that market start to go above that bar now, and that would also take me into the top lane of the floating zone,
Sure.
I would be feeling that would be a good opportunity to buy. Now, the reason for this is, let me back up. The reason for this is because I know historically there was that big jump bar. So I know there was inherently strength in the market.
Yeah. What this one here?
That's it, yeah. So that's what I'm working from, inherent strength into there. I can see where the stops would have been. And now I see the market come back down to that area. And I'm thinking, if this holds at this level, this is likely to be an upward moving market from here. What happens then is that we see the market is driven right the way back down. And the next bar, the big bar down.
Yeah. Sure.
Now, can you understand how a lot of traders at this point will think, that's it, it's away. Boom, it's going to go through that line. And so what they do is they sell under the 5599. So in other words, they put sell orders up, they stack them all up, and they put them in under that level where those stops were at around 5599, which is your blue line, your horizontal blue line on there. Okay.
Sure.
Now, as the market goes through that, what does it do? It triggers all those orders, doesn't it?
Yeah. What,
And
as it goes up there?
So as it goes down under on that next big bar down, that's it, yeah. So as it goes through, it triggers all those sell orders.
Sure.
Yeah. And so the market then picks up this real lot of volume. Now, remember though, we've still got our underlying strength historically.
Yeah.
So we've got to ask ourselves a question at this point. Is this a genuine breaking out of the stops? Okay. Or is this manipulation? That's what we need to know, because if it's a general break. So can you understand now how a lot of traders would have this massive feeling they'd be drawn into the market saying, yep, it's cracked, it's going to go, and they would pile into the market.
Yes, definitely.
Now, and we can see that by the blue bar. That's what that tells us. It tells us that's what's happened.
Yeah.
But curiously enough, the market doesn't continue down.
No.
So now I'm thinking, hang on a minute, that's a real red herring there. I can imagine all these traders would have been sitting on the side there thinking, yeah, come on, let's stand there. Now it's going to go down. Let's sell the market. Now it's going to go down. And so we see, and then I see after that we get the yellows.
Yeah.
And what really intrigues me is next one on. Now, notice that difference?
Jump
bar, see it moves up. Now go to the next one, the blue one.
Yep.
Now I'm really keen. Because now I'm thinking, the market's just gone down a little bit, but as it's going down, which everybody's thinking it's going to carry on down because of that big blue bar, it puts in that volume there, and now the market jumps back above the 53.99. And at that point there, I'd be very happy to buy the market just above 55.99.
On this bar here.
Yes.
On the green intent.
Yeah. I'd actually have my order in above that previous blue bar. So if you go back one there,
yeah,
I'd have an order in above there, just above the 55.99, and I would automatically pick that order up as I went through. Now just put your 90 pip tool on. Okay, drag that down from the top of the day, so the start of go early morning. That's it. Keep going down. Now so keep going down. Down. Put the top line of it on the high of the day early. That was it. The early part. That's it, about there. Okay, so I'd have that marked up as I was, put it on in the morning. I'd look at that and see how that was, because I'd see once I was in the market, I'd come in at about 8 o'clock, wouldn't I? And I'd see the market coming off there. So I'd put that tool on there just to start mapping out the market.
Right.
And then once I'd seen that and I'd played it through as we've just talked about, where we've got the bet 930 that we've done where I want to go long, I think, okay, now I'm going to be into a long market because I'm going to be I've seen the bar this morning, the jump bar this morning. So now I'm going to move that up. So I want the bottom line of it on the low of the day at that point. So move that up now. Okay, right, that intrigues me. Now that's what we want to do. So I've got that on now. I'm now long into the market. And I'm looking now for the 90 pip move. That's what I want to get. I want to trade up to that 56.70. I want the 55.60 pips out of this market. But what I want, of course, has no bearing on the fact of the matter at all. It's just I'm mapping out because of what I expect. It's what I want to lay my trading plan for. So I'll sit with the market and sit with it, and I see it comes up to the top of the floating zone.
Yeah.
And you see then what we get a push up to the so we get the blue, a yellow, blue, a yellow, blue. Then we get the blue. Okay.
This one.
Yeah, and we get that push up, and it pushes up to the 45 line. When it pushes up to the 45 line, I would be moving a stop up. Not very high. I'd only be long just above the 55.99. I'd probably have about 5 or 6 pips locked in at that point. That's about all I'd have in.
Right.
And then you see the next bar comes down, the yellow one, the next one comes down.
Yeah.
And that would stop me out.
Yeah.
Okay. Now, at this point, I'd probably making 5 pips, might take 3 pips out of it. It's nothing. It's all sort of, it's gone pear shaped. The deal that we set off. Now I can now see at this point that market is in manipulation, because originally how it started off with that underlying strength, it came down. The market then went into the bit of strength, then played out where I went long above the 55.99. Yeah. And then the market gets down into this downward moving, and that down move there, it would make me very cautious, because the underlying strength of the market that we've traded so far, that was shown in the morning and we've traded so far, doesn't get erased when you think about it. Keep going to your right. Keep going over there. It doesn't really get erased until then, does it?
No.
It takes all that time for that to go. So, you at that point there, I'm still looking. And if you go back 1 bar from there, I'd actually buy the market again above that bar.
Would you?
Yeah, I'd have a buy order in above that bar there, because I'd be anticipating, look, it's come down to the bottom of the floating zone.
Yep.
Next bar up.
Volume there.
Yeah. Underlying strength, which we know about. So we've got that historic of underlying strength. I'd buy above that bar there. That would also take me back into the top lane of the floating zone. Now that order wouldn't be triggered, obviously.
No.
Okay, but that is a key point there where I would want to buy above. So then the market carries on down. You can see, go over to your right, picks up volume.
Yeah.
I'm thinking, okay, well, this market could get into a downward move now. So what I'd be looking for is the market to move up. So give a bit of a bottom, if you like. I don't like them calling them bottoms, because there's no such thing as a bottom, but I'd look for the market to be moving up. Now, if you go back 1 bar, that's, we could say there's a low on there of 55.65.
Mm-hmm.
Yeah. That's an area I'd be looking for the market to break through before I got into a short trade.
Yeah.
Okay. And then what do we see? The market then goes into the next bar. We have, what's the spread on there? 71 pip spread. That now tells us, obviously, we can see the market has now been completely manipulated.
Yes.
Do not trade in this market again.
No.
Because
I'd be lost now.
That's it. You might have got 3 or 4 pips out of it. Your long order didn't get triggered. That was later on above the 12, around about the 12.30 bar. Well, it would have done if you'd been in the market. It would have been triggered. But that's, I wouldn't have left that order in there after the market then carried on for another hour and a half down. I wouldn't have done that. I'd have been looking for that next entry. So that market probably would have produced, at best 3 to 5 pips profit. That's it. Nothing. And there's no way of getting away from that. And once that bar comes up like that, 71 pip spread, just walk away.
Yeah. Okay.
And I suspect what people do is, they get drawn into that and they see that big up move and they say, oh, yeah, that's it now. Now it's going to go. Okay. But to me, that I can see the manipulation that's occurred from them this morning. I couldn't see it at first, of course, because it wasn't there, but I can see it after that time. Yeah.
Sure.
But can you understand why I wanted to look at the long side of the market?
Yes. So we still, because I was getting caught earlier on in when I lost some trades by, I felt trading too early in the day.
Right.
I.e., before the two blues, say 8 o'clock in the morning in the UK time,
Right.
and I started beginning to really just allow this sort of area to just do what it does and start taking more notice after 8 o'clock UK time as volume starts coming in.
Okay.
And sort of like began to say, well, I'm not going to really pay too much attention to this around here.
Right.
So perhaps, obviously, I ought to in the first place. Also, just leading back.
I just want to stop you there. And I want you to go back to the previous day. Go down, scroll back to the last blue bar. No. So you can leave it where it was, but just
Right.
I meant move your cursor back. So let's move your cursor back to the
sorry.
last blue bar.
This one
There we go. There.
Sure.
Have a think about this.
Yep.
The market now is getting. I know it doesn't close, but it's getting very thin volume. We're coming up to 11:15, quarter to 12, midnight. Very, very low volume. The volume's thinning off. Okay.
Sure.
But we've got a blue bar. This last blue bar. Why do you think that could occur?
At that stage, I have no idea.
Would you think that maybe there's a group of people that might have an anticipation about tomorrow, and they think that could be a good place to enter?
Okay.
Put a horizontal line on the belief bar of that belief bar. Now what happens in the morning?
Are you talking about this bar going straight through it?
Look at the bars preceding to it. Look at it's like a hairbrush, probing.
Yeah. So it's
see
found
that?
support there.
Trying to push up through that, and then what happens on the other bar? On the big bar, push straight through it,
Straight through.
and then what does the market do?
Carries on across.
And tries to see how it comes down for the line again and again and again, and then bang.
So what exactly does that mean?
What that means is that there is a group of traders, and I say a group of traders. That's market makers entering the market, likely. We can't know this for sure, but that's an increase at the end of the day. Why would you feel confident as a trader to suddenly start putting orders in at the end of the day? What would encourage you to do that?
Yeah, no, I get where you're coming from there. Yeah, you'd be a bit suspicious.
You'd be a bit suspicious, wouldn't you? But But if you knew or had a very good idea of where there was a very significant level in the market, you'd be quite tempted about putting some money on that, wouldn't you?
Yeah.
Yeah. And so that again tells a story, doesn't it?
Yes.
And these are the things that you need to look for. You need to look for these clues about how things are happening, how the market is rolling out. So, okay, this is what are we now? We're 12. We started this at 56, so we've been on about half an hour now. So we don't want to make this too long, because people are there. Well, we can do this again. It's not a problem, but we don't want to make it too long. Otherwise, it'll be too much for people to digest at one time. Yeah. So, what we've gone over today, what can you draw from that? We've spent half an hour here looking at the chart, looking at this very difficult day, and that was a really difficult manipulated day, as we can see. What have you drawn from that?
Obviously, I think I need to pay more attention to these sort of areas and something like this, as you pointed out there. I need to be far more cautious.
Well, it's not cautious. You need to be more, because being cautious is not really, that's a bit like a fear thing. You need to get rid of the caution. So if you feel caution, you need to get rid of that caution. And the way to get rid of that caution, how do you think? How are you going to get rid of that caution?
Oh, place to trade?
Not necessarily place the trade, but because you could place a trade under that caution. And so that wouldn't be a very good thing. So what is going to remove caution from you? Do you remember me talking about the analogy of crossing the road?
Yeah, having a belief.
Having a belief.
Mm.
Okay, so you you've got to have that belief. You will have to have that belief before you take that trade.
Yeah.
That belief will either be one that you've created
Yeah.
or one that has been given to you.
Sure.
Which is the dangerous one?
Oh yeah, the one that's being given to
The
me.
one that's been given to you. So this is what I said about when you see a market start to run off in a certain direction. That is when a belief has been handed to you.
Sure.
It says, here, this is the horse that's going to win the race. And you feel very excited about it and you feel driven to get it on. And you look at it and you don't enter and it keeps going down and you don't enter and it keeps going down and you think, shit, I should, this was, oh God, yeah, it's absolutely right. I've got to get into this. Yeah, and it goes a little bit more and it goes a little bit more and it goes a little bit more. And then you hit the button and you sell the market. And almost instantly at that point, the market turns against you.
Yeah.
Now, how many times has that happened to you?
Yeah, quite a few times during the 20 trades, that was sure.
Right.
For sure.
So you basically, and almost immediately that trade goes against you. When the market does that, when it immediately goes against you, and I mean literally immediately, you can be almost certain that you have been manipulated into that trade with all the other traders. You've been handed a belief, you've took it on it, and you've acted on it.
Yeah.
And
yeah.
that is so when I said to you when we started off this call, I said to you, when you feel that absolute compulsion to try, this is gonna go, it's gonna go, yeah, now, that is likely not your belief.
No.
It's been handed to you.
Yeah, which I know for a fact that I was during that period.
Yeah.
That
So-
bad week. I was doing too much bar watching. I've changed what I'm going to be doing in
Yeah.
the future. But just touching back on this last thing, perhaps before we go,
Yeah,
this would be one area that I would struggle with as well, as we begin to sort of get the 45 pips down away.
Right.
Yeah? And then you see this little retrace here. I'd be wary. I mean, this is where it causes me some confusion as well. And I guess the answer, I suppose I said it before, is no stop take from above. Because at this point, I'd be looking and say the stops.
can you see, Stephen, how you've got this information in your head? You see how your brain came up with that straight away? I guess I'd be thinking no stop take from above.
Yeah.
But you see, when you're doing it live and you're given a belief, you ignore that.
Oh no.
That gets kicked
No.
out your brain.
I did well last night.
Right.
I didn't trade last night.
Right.
But I actually felt that I did well.
Right.
Because I didn't see the things that I was looking for.
Right.
Hence didn't enter the market.
Okay.
And didn't make any pips, but I was pleased with the fact that I didn't actually do anything. But this is a classic example of
Yeah.
where I'm having issues with at the moment, because
Right.
we're looking for this sort of 45 pip manipulation. Not all the time, of course. Obviously, we know that. But so I'd be thinking at this stage, when I saw this little retrace here
Yeah.
after this jump bar, and perhaps the market has come down here and gone back up. We've got a couple of little waning bars there, and then the market gets driven down, and then we get this retrace. Now, I'm aware of the stops taken here,
Yeah.
and thinking, well, this could now be what turns the market up, and it's this bar has
Yeah.
created the energy from this stop take.
That
If I'm thinking
sucked all the
correctly,
traders in.
sucked all the traders in,
Yeah.
or taken out the stops of the people who were buying up here
Yeah.
and had stops under here.
Yeah.
So the content of this bar would be traders selling plus picking up the stops from under here.
Yeah.
But so now I'd be like, well, is this market going up? But then we get this little retrace here. At the same time, I'd be like, well, now is this the big jump bar down to show beliefs in the market's underway? Here's our little retrace. It's retracing into the bottom lane of the floating zone. Now we sell the market.
But now
And
you're-
This is where I'd be like,
Right,
now,
but you're
should I be
forgetting-
selling, or
but-
should
but-
I be buying?
Right, but
Or
now
should I be
you're-
doing nothing?
But have you forgotten the earlier strength we saw?
Yes, that's what I mean. So I'm
And
not paying
and you
enough
and you
attention
haven't
here.
seen a really definitive stop take. So what I'm going to say to you this is what I do. You don't want to be thinking about what you've just described to me now. You don't want to think about that. This coming week, what I want you to do is to have in front of you your journal. I always say to you, keep a journal. Very, very important, keep that journal.
Yep.
And I want you to make a note of the times. This is not necessarily when you're going to trade. I want you to make a note of the times when you feel compelled to place an order.
Yeah.
Okay, just write down the bar, write down
Yeah.
the time, and you just put it down. So whether you do it or not, that's inconsequential. I want that record of when you feel compelled to trade the market. And I urge everybody listening to this does exactly the same. Just get a sheet of paper, and all you're doing is you're going to record your compelling moments. And our compelling moments are when you feel, yes, I've got to do this, I've got to do this, got to do this. And when that belief as well has come from almost nowhere, it suddenly comes upon you, bang, yeah, I've got to do this. That's the time I want you to write down the bar. I want you to write down the feelings that you've got, okay? And then when we have the next conversation, and we'll give this a week, I want a week's results. Then we'll have another chat over this like we're doing now and record this again. And then we're going to go over that and we're going to break that down as well. Because all we've got to do is, the difference between failure and success is as thick as a cigarette paper.
Yeah, sure.
Okay? And you're just the other side of the paper. We've got to get you to to the right side of the paper.
Sure.
And it's doing tasks like this that the traders don't do is understand why they feel compelled. So that's what I want you to do this week. That's your exercise. Go through that, write down all the compelling times when you feel absolutely you need to do. And I bet you, if we can get some other traders to do this, hopefully listening to this, if we can get that, I bet you that you will find that your compelling times will match within moments. And that, can you imagine then, as a trader, how powerful that information is?
Yeah,
Once you learn to recognize that information in yourself, what does that really tell you about the market? It tells you the market's about to turn, doesn't it?
Mm.
How powerful is that?
Yeah, absolutely.
So you use that negativity of being drawn into the market, that overwhelming urge, you use it as an extremely powerful indicator.
Sure.
See? And that's what I want you to do I don't want you to focus, I don't want you to focus on the nitty bitty bars. I want you to focus on what we've just talked about, that feeling. Because that one feeling, Stephen, if you bore into that one feeling and you learn to recognize that feeling in yourself, your trading will be transformed. Because when everybody is thinking about selling the market after a market's been driven down, because you'll know they've been drawing in and you have that urge, and then you see the market go up, what level of confidence will you have when you've seen this happen? When you've analysed the feeling in yourself, and then you will get that feeling again and again and again and again, and you see the market reacting there, are you going to be welcoming that feeling when it arrives?
Yeah.
You're damn right you are.
Yeah, absolutely.
You're going to be thinking, hey, holy shit, I really feel like I've got to sell this market at the moment. Hang on a minute. Actually, I should be buying the market. And then you immediately look for that buying opportunity.
Yeah.
And trading is that simple.
Yeah.
And that's what I try to get across to people. So hopefully, anyway, we're going to have to bring this to a close now because the video's gone on way too long.
Yeah,
so listen, this is what I want you to do this week. Thanks for taking the time to come on. It's good to talk. And, I like to record it like this because it helps everybody. And, we may get somebody else next on if they want. I did put this out trying to get people to come on, but not many people seem to want to come on and do this. I don't know why, because I think it's a good learning experience for everybody.
I think it's great. I'd be more than happy to do it. Maybe next time we can touch on again this little level here.
Yeah.
Which, because I know Khan in particular has done this quite a lot. He goes back some days and looks at these areas, and I don't think
But don't forget, this week...
just touched on it, but I don't think I'm understanding enough of what that means.
But don't forget this week...
Above it.
Yeah, but don't forget this week, sorry to interrupt you again, but don't forget this week, I don't want you to do that.
No.
I want you to record, I just want you to do this one thing.
Yeah.
Just record these times when you feel you've absolutely got to get in the market. So in other words, the market has given you that impetus to get in the market. That's what I want you to do. That's what I want anybody listening to the video to do this week. And then we'll go back and maybe we can get some postings on the forum from other people of their times when they felt this exact urge to do. And I think it will be a very interesting exercise. So we'll call it a day now. I'm going off to have some lunch. Is it sunny and warm in Australia at the moment?
It's actually raining.
Well, the sun's out.
I emigrated for, but it's soon be warming up.
Well, the sun's coming out here today. It's bloody cold in the morning, but the sun's coming out now. But so we're going to have a bit of lunch, and then so I'll say goodbye, and we will catch up very soon. Well, hopefully next week, and we'll carry on.
Brilliant. Super.
Okay.
Thanks for your time, Martin.
That's all right. Take care. Catch you soon.
You
Bye bye.
Bye.